What's the best structure to manage your property business? Through a limited company or under your personal name? Let's find out. Welcome to our channel. Hi everyone, I am Sujeewa, a qualified chartered accountant with years of experience in the UK real estate market. Together with the skilled team at Crevati, we're passionate about empowering property managers and investors like you to maximize your profits and minimize your stress. Today, I am going to explore the best way you can manage your property business. In summary, limited company or your personnel name. There are many things to consider before taking this decision, but main factor remains stable over the years. That is best tax saving approach. Please watch full video and I am sure you will get inside information to pick the best way for your property business. Now let me talk about basic tax implications in both avenues. If we go on the road of personnel name, if you are lower income taxpayer, then it is more attractive, because lower income tax rate is 20% up to 50,000 income. If you do not have other income such as employee income, dividend income beyond this level, then it is good for you. What if you cross the threshold? Then automatically you will ended up to 40% or 45% tax bracket depending on your income, and you have to pay very significant amount of tax under the personnel name. Now let me explain you limited company avenue, where you have to pay corporate tax at the rate of 19%, and if your company make more income than the lower rate, then you transfer to the rate of 25% bracket. Even 25% is much lower than 40%, so most tax saving avenue is limited company if you are higher income earner. Before making conclusion, think about your future expansions and other plans to have good guess about next 2 to 3 years, so you will be in good position to take a call on the tax matter. Since I have touched income tax, let me highlight other taxes as well, but I will be explaining these taxes on separate videos. Just to give a brief on other taxes, starting with capital gain. Capital gain arise when we disposed our property and then need to pay percentage of the disposal gain as a capital gain tax. We call it CGT. Now CGT, again, if you're in limited company avenue, it will treat it as normal business profit and need to pay tax on the gain under corporation tax. But if your property is under the personnel name, you need to pay CGT at the rate of 18%, which is lower rate, and the higher rate is 28%. The good thing is here we have CGT allowance for individuals, which is £6,000 per year. So we need to think about carefully when we want to sell our property, and accordingly tax implications on CGT. Then let's move to inheritance tax. We called it IHT. Now, IHT apply when you are not in this world. That means after you passed away. I will give a basic info here as it is complex area, and I will cover IHT in a different video. Now I can say that IHT is better to manage through a limited company rather personnel name because it applies to individuals. Remember, IHT rate is 40% after allowances. It is a significant amount. However, we have very good allowance for all individuals of £325,000. If you have more properties and your wealth is much higher, then you need to plan properly. In a limited company structure, I can say IHT can manage very well. We have another tax component that you need to consider in the UK, which is stamp duty. We called it SDLT. This applies when you buy the property and you need to pay % of the property value. There are different rates apply, starting from 0% and adding 3% depending on the value of the property. Mainly, your solicitors will deal with this tax, and you can find out what is the rate applied to your property through HMRC website. If you buy a property under your personal name and it is your first property, you have allowances which will reduce the SDLT, but the company does not have such allowance. So we covered tax part in a simple way, which is the main element. Now move into other areas for consideration. Another key factor is risk elements. If you run your property business under personnel name, you are into unlimited liability situation, and in the event of adverse incident with the property, it will drag you to situation with your personal money. But if you are in a limited company, you will be protected to the company capital. When it comes to the tenants issues as well, limited company is better option. Let's say, for example, your tenant started legal proceeding, then it will be under the company name. So overall, for the risk factors, the limited company option is better. Funding is another main factor. When it comes to funding, the UK banks are more likely to offer funding under the personal name. Mortgage interest also lower when it comes to personal approach. If you are under the company, when you approach bank, they may ask you to provide personal guarantees for the loans. Hence, funding is better with personnel name option. However, when it comes to mortgage interest, under the personal name, you can claim only 20% of the interest as a tax credit. If you are high taxpayer, you will be losing component of interest on mortgage. So now you have more information to take a call on which way to move your property business. Please note that this is only general guidelines and situation can be vary to your personal circumstances. I highly recommend you talk to your accountant before making any conclusion, as there are many factors that we need to consider before planning your property business. If you have any question, please comment below. We will answer all your questions. Thank you for watching and see you in our next video.